All right, Xiaolin Chen is head of international at KraneShares, joining us now. Thank you so much for your time. I wonder if you could start with a bit of context. How has China got to this position that it essentially needs to shore up what's going on in the property sector?
I think after nearly 12 to 18 months of Chinese policymaker very consistent, persistent to introduce policies to help on the demand side, markets still feel it's not enough. So here you go today, the Central Bank of China is showing the market the bazooka money coming. This policy clearly shows the market that when they say they want to help with the market, they mean it. Now is the action time. With the policy, particularly interesting is now they reduce the down payment for first-time home buying, second-time home buying. I think it's very concrete policy that's literally going to inject a lot of confidence for investors now thinking this market will and is going to stabilizing from here.
Let's talk about this plan from the People's Bank of China unveiling this. It's multi-billion dollar, close on $40 billion US. It's a fund. It's going to be made available to local government to buy up some of this property that hasn't sort of materialized as it should. How is that going to work? And do you think that's going to go a significant way to solving the property crisis?
In certain ways, it will, because at some point, most of the state-owned enterprise wants to buy certain housing properties for their senior executives or even some executives that are working in different locations to facilitate them an accommodation. It's not a culture easily understood in the Western world, but some of the corporates in China do have housing themselves to facilitate as such to ease, from one location to another relocation of their staffs. So this is actually needed in one way. Second, the local government, if they step in to start help, I think it's more direct for them to know where the issue is and more targeted to help on the certain areas and their own cities. This is the second. And third, I think in this instance, this is actually going to show, central government is dedicating the responsibility to the local government to make sure you can deal with your own situation, but you have a backup from the central government to support you in such policy.
China also on Friday announcing the sale of these long-term special treasury bonds, I think to the value of about $138 billion. I would imagine that's also going to go some way to help the Chinese economy, which to a certain extent has been dragged down by what's going on in property. How has the market reacted?
Thus far, the issuing of the ultra long-dated bonds happening in China is actually 14th to 19th, so it's still happening right now. The duration issued, depends on on different years, 3-year, 5-year, 20-year, 30-year, and eventually 50-year bonds. Thus far, the take was 100%. I saw some news reported on onshore showing some of the bank has allocation, certain quota on the day. They open the branches, people lined up to buy. After the 6th customer in the line to take the bonds is finished, the quota is gone. So it's very much highly regarded by the local investors. One, Chinese government never default in their history. And now it's slightly higher yield with those kind of factoring in. You definitely attract investors to buy.
Yeah, so some big moves from the Chinese government there. Thank you so much for breaking it down for us. That's Xiaolin Chen, head of international at KraneShares.